We were doing a deal to be the search engine for the Olympics, NBC Olympics, I remember. And so we were discussing terms, and they said, this could be a $500,000 deal. And I'm thinking, wow, this is going to be our first significant revenue contract. And when we sent over the deal terms, they said, no, you pay us $500,000 for the right to be the search engine.
Yeah.
I think that's when I started to realize the internet economics weren't really adding up.
Welcome to Triangle Tweener Talks, a weekly podcast by builders for builders where we explore the startup journey from the idea to the exit and all the lessons in between with an exclusive focus on founders from the Triangle region of North Carolina. Tweener Talks is produced by Earfluence. Now here's your host, serial founder and general partner of the Triangle Tweener Fund, Scott Wingo.
Welcome to this episode of Triangle Tweener Talks featuring Jud Bowman. So far on the Tweener Talks podcast, we have released 12 Triangle-based founder interviews. None of them has had as many ups and downs as the story we're going to hear from Jud, and also his downs are lower and his ups are bigger than probably anyone we've talked to. Jud was 18 when he decided to defer going to college and become an entrepreneur. He started Pinpoint when he was 18. And then in this interview, we're going to hear how he went from Pinpoint to Motricity, a long journey there, and that's an important one for the Triangle because a lot happened there. Then he started Appia, and that became Digital Turbine, and then finally we're going to learn about his current company, Sift. This episode's brought to you by our sponsors, Whitley Recruiting Partners. Whitley Recruiting Partners specializes in recruiting top tech talent for growth stage startups in the Triangle. They target industry-specific entrepreneurial employees who drive immediate results through a fast, accurate, and scalable recruiting process. Aligned Technology Group. Unlock the power of the cloud with Aligned Technology Group's free Catalyst program. As an AWS advanced tier consulting partner, they specialize in cost optimization, security assessments, and tailored cloud strategies for startups and SMBs. Let ATG help you maximize your cloud investment and navigate your AWS journey with ease. Bank of America. Their transformative technology group helps game-changing tech businesses and founders realize their boldest ambitions across a wide range of technology sectors. EisnerAmper, formerly HPG, one of the world's largest business consulting firms with a dedicated technology practice offering outsourcing, accounting, tax, and advisory services. EisnerAmper's experienced professionals serve more than 2,000 technology companies, from early-stage startups all the way to public enterprises. Discover how EisnerAmper's stage-specific solutions and industry expertise can help you achieve your milestones from startup, international expansion, M&A, to IPO. EisnerAmper.com/tech. Robinson Bradshaw. They are a full-service business law firm with a passion for supporting the Triangle's entrepreneurial ecosystem. Smashing Boxes, a Durham-based design-centric digital transformation company. And special thanks to our friends at Earfluence. This podcast would not be possible without their awesome partnership. And now, without further delay, here is my interview with Jud Bowman. Buckle up, everybody. It is going to be a bumpy ride. Hey, Jud, thanks for coming on the podcast today.
Hey, Scott. Glad to be here.
Yeah. I always give you a hard time because when I first met you, you were like 18, 17, 16, somewhere in there. You were like, in my mind, you're always a high schooler.
Probably
obviously
18. Yeah.
You're all grown up now. But, it was helpful to me because I was always like one of the youngest entrepreneurs in the Triangle. And then to meet someone younger than me, that felt good to not be the youngest anymore that I want to kind of pick on. The cliche jokes of like, do you guys have beer Fridays and you can't drink? And how do you rent a car? All those kind of fun stories.
Totally.
Yeah. But let's jump into that. You are unique in that you got at this pretty early. But are you from North Carolina? I actually don't know the answer to this one.
Yeah, I'm originally from North Carolina. I was born in Greenville, so
Greenville.
Eastern North Carolina.
Okay.
That's where my dad lives.
Oh, okay. I didn't know that. Yeah. And then you found your way in this neck of the woods through the School of Science and Math.
Right.
Yeah. So you're in Greenville. When did you know you were going to be one of the hip kids and do what we currently call STEM?
I'm still trying to be hip, but I think, so my parents got divorced when I was like 5 years old. So moved with mom to Raleigh and kind of grew up in Raleigh and went to the Raleigh schools. So then I had the chance to go to science and math.
Yeah. Cool. And is that at that point in time, was that something you had to kind of apply to, or they kind of discovered you and asked you to apply? How does that work?
Yeah, it's kind of crazy too. Recently it's been ranked like the best public high school in the country. So feel so lucky I got the chance to go there. But yeah, you had to apply. It was super competitive back then. I think it's probably even more competitive now.
Yeah. And just so people know, it's kind of like a magnet. These are my words. It's probably not the right words, but it's like a magnet for the top certain percentage of folks in the sciences and maths. And there's 2 locations, right? Isn't there one out west as well?
That's right. They just opened a second campus in Morganton, which is really beautiful, closer to the mountains.
Yeah.
But I went to the one in Durham.
Yeah. Is it at the current location? It's always been there?
Yeah, the old Watts Hospital.
Yeah. Yeah. It's always fun when they convert old hospitals into things. Amazon first headquarters was in this really creepy old hospital up on a hill. It's there's always stories about it being haunted and stuff.
Right. The one that they just opened in Morganton too is where the School for the Deaf is. So.
Interesting. Yeah. Got to reuse those structures. Okay. So you go to this and suddenly you're surrounded by the brightest folks from across the state. When did you decide to kind of go down both kind of the computer and or entrepreneurial path?
So I was there from 97 to 99. So think back to what was going in then. It was the internet mania, the .com boom was in full swing. So I think it was probably hard not to be caught up in that a little bit.
Mm-hmm. Yeah. So then did they have classes on? I know today they have a really big, a lot of the alums, and I know Joe Colopy is big on this. There's a big entrepreneurial push there. Back then, did they have an entrepreneurial thing at all?
Not at all. Yeah. So, this is a long time ago, but they didn't even have internet on campus, believe it or not. So.
Yeah. Okay. So then did you take a programming class, or how did you get into the computer side of things? Had you already picked that up?
So the thing is, I don't actually know how to code. ChatGPT has been like a lifesaver. So I'm probably more technical today than I ever was.
Yeah.
I think what's cool about science and math is it brings in these amazing kids from all over the state. They take at least one from every county. It's like applying to college. And when after I'd gotten this entrepreneurial bug and was starting to work on this project, I recruited a co-founder from the school, Taylor Brockman. He was from Shelby, North Carolina.
Yeah.
So he was the coding wizard.
Yeah.
I was more like the product guy.
Yeah. Cool. So you had this idea. What was so you're at the School of Science and Math. You're 16?
16.
Yep. And you have an idea. You're going to start a company. And what was the company idea?
So I had gone to a camp up at MIT the summer before senior year. And that's probably where it really hatched. And I came back for senior year, I'm going to do an internet startup. I have to do this. And the idea was pretty terrible. We were going to build a search engine. So, it's kind of like today, what's the hottest thing? ChatGPT, AI. Back then, Google was a project just coming out of Stanford. And so search was one of the hottest spaces. And so we had this idea, we're going to build a search engine.
Yeah. I'm counter programmed on that because I think sometimes, Google proved this. Sometimes when Google came out, everyone thought search was solved because we had Alta Vista and Dogpile and all these different things. GoTo.com, which ultimately bought one of my companies. Yeah. So there's 10 search engines, well under Ask Jeeves, remember all this? And then, everyone looked at Google and search has been solved. These guys are crazy. And turns out, there's always a way to make things better. So, yeah. So you came up with this idea and the name was?
No one knows this part. The original name was wherethehell.com.
Whoa,
so that was no one knows that except Taylor.
Yeah. Edgy teenager vibes.
We'd managed to register that domain and we thought we were super cool. So, and I don't think we were initially thinking company too. This is just like a project in the dorm room.
Yeah.
And the thing that we were inspired from, you mentioned some of the names, like GoTo.com was going pretty strong. We were totally aware of them. Mm-hmm. Dogpile. Do you remember Metacrawler, which was owned by GoToNet? Mm-hmm. Gosh, I haven't thought of some of these names in years and years. But we were kind of inspired by Metacrawler. So the original wherethehell.com was a Metacrawler. We were indexing and sort of combining the results from half a dozen of the engines.
Yeah. So in our world of internet, meta on top of something means it then goes and runs searches across other things, rolls them back up. The one that's really popular is meta reviews. Is that right? Mm-hmm. Yeah, it still exists. And there's a couple of these meta things out there. A lot of the search, the travel engines like Expedia is basically a meta.
And Auction Rover, one of your companies,
yes,
right? Was a meta crawler for auction results.
Yeah, back in the day. Cool. And then when did you guys? So you're starting Where in the Hell? or
Where the hell?
Where the hell?
I don't have the domain name anymore. So.
That would have been kind of fun.
Probably.
What did the logo look like? Was there like fire coming out of hell or something?
Yeah, probably something like that. I don't even remember.
Some demon horns kind of thing.
I don't know if it had that.
Super fun. Kind of. It's fun to look back on that stuff and be like, what was I thinking?
What was I thinking? Yeah. Well, but I think that, along the way too, I had gotten into stock investing as a young kid, thanks to my grandmother.
Uh-huh.
And so, as you can probably imagine, probably just like the kids that trade crypto these days, I was trading all these .com companies, and I got kind of entranced with this company called Ink2Me. I don't know if you even remember that one. It was like a company that also built a search engine, and they had this idea of like licensing it to other people. And so somewhere along the way of like building the Metacrawler and having this silly name wherethehell.com and senior year, we're halfway through senior year, and I thought, hey, maybe we could actually build a company. And so I think the one that really inspired us was Ink2Me. And we're like, is there some twist on that we could turn into a business?
Yeah. Okay. So senior year in high school, did you graduate?
I did graduate.
Okay.
Yeah. Did the whole college, process, everything.
Yeah, I remember
applying for college and.
Yeah. So you apply for college and you've got this idea. And then what'd you decide to do? Did you decide, where'd you get into school and what did you decide to do?
Yeah, I applied to 5 schools. I applied to, Duke, MIT, Princeton, Harvard, and Stanford. And I got into MIT, Duke, and Stanford, but I got waitlisted at Harvard. And that actually might have been like one of the most important things, because I think I had always sort of put Harvard on a pedestal. I thought, I'm going to Harvard. And when I got waitlisted, it was sort of like, maybe I'm going to forget college, right? I think that's where that bug first got in my head. Even though, I think in reality, Stanford might have been the best place, which is where I ended up choosing to go.
Yeah. Okay, cool. So you sign up for Stanford. Did you move out to Palo Alto and everything?
No, not initially. Eventually, yes, but not initially. So, what time is this? It's you get your college letters in March. So I, kind of the same week I got waitlisted at Harvard, but I got into Stanford. I had to decide. I even got a scholarship, I think, at Stanford. So I chose Stanford, and obviously being into the startup and .com scene, it made a lot of sense. I was excited about that, but I think that's when I put the idea of turning this wherethehell.com into a business a lot more seriously. And and Taylor and I decided to continue the project into the summer.
Got it. Okay. So you accepted your Stanford, and then you decide, well, let's just do this thing over the summer.
Let's just do this thing over the summer. We moved into an old farmhouse, which is probably covered up by South Point Mall or some neighborhood now. It was over in that part of Durham.
Yeah. Cool. And then you changed the name, thank goodness, to
Intertect.
Okay. All right.
Another surprise. I know you were waiting for pinpoint.
Yes, I was. I know pinpoints in here somewhere.
Yeah, the original idea, we were like, okay, we got to grow up, and we were inspired by Ink2Me. And we came up with this, what I look back on as sort of a terrible name, Intertect. And I'm not saying Intertech. It was the combination of internet and architect, which I thought was great. And the .com was available, but nobody could say it. So anytime we said it, they thought we were saying Intertech, which is awfully generic. But that was the name we went with. And
important lesson to founders. If you have a company name, say it to someone and get them to spell it back to you. And if they can't do it after 4 tries, then
it's a terrible name.
You may want to.
I'm actually really bad, I think, at coming up with company names. So.
Yeah, it's branding is hard.
Mm-hmm.
Yeah. Okay, so the idea is you're going to build this search engine, and then you're going to go have people rebrand. You're going to kind of private label it.
We're going to private label, and the twist was Ink2Me, I think, powered the search for Yahoo and a few of the other big portals at the time. And then there was Google, which had now started to turn into a company itself. But I think the thing that we thought we could do was be the search engine for all the little sites. They used to be called vertical sites. Mm-hmm. So we were thinking, golf.com, something like that. And we would power these thousands of other sites with a search engine.
Yeah.
And that idea, at least at the time, seemed good enough that by the end of the summer, we'd gotten a term sheet to raise some venture capital, which just blew us away. Here are these 2 18-year-old kids, and we got, I think multiple term sheets from different investor and angel groups around here.
Yeah. How did that happen? Did they find you, or you guys went out looking for capital?
I'm getting so old, I don't even remember entirely. I think I had built a business plan. Back in the day, you had to build a 60-page business plan, and there wasn't ChatGPT to draft this thing. So. Yeah. I had drafted up a 60-page business plan with our Intertect logo smack on the center of it. And I think I downloaded a list of venture capital and angel firms, and I would have mailed or FedEx this to all of them across the country.
All right. So you sent out you FedExed a business plan. Wow. Old school.
Old school.
I remember the business plans. You'd realize you'd spent like 3 days worrying about like, if it was 1999, the 2004 revenue. And you're like, wait a minute. Like, it's like so ridiculous. And like, but
nobody does that anymore.
Yeah.
I mean, I don't think when's the last time you saw a business plan? I don't even know the last time I saw a 2-page exec summary, which was like one of the things for a while there. It's all the 10 to 20 slide decks these days.
It's a deck. Yeah. Yeah.
I still have though your old auctionrover.com business plan. I don't know how I got it. Someone gave me an original and I have it, back at the ranch.
Oh, wow. Yeah. Yeah.
So that would have been one of the ones I would have used for inspiration.
You'll have to send a scan and we can mock that relentlessly. In there you would like get a little wild and be like, put your wildest aspirations. Like, when we're a verb, being a verb was big back then. We're like, I remember that was probably part of the plan. We're like, we're going to make this a verb.
We're going to intertect that. It doesn't work. See, my names are terrible.
Ours was like, are you roving? So we were going to try to make roving like a, Googling kind of thing. Did not end up that way. So you sent out all these things and you got some answers back. And were there firms outside the area or was it mostly local firms that were interested?
I think I did hear there are 2 firms that I remember outside the area. It was a firm called Draper Atlantic. I don't know if you remember that.
Yeah, they invested in Auctioneer.
Okay, that's probably where I got the business plan then. So I would have met with those guys.
Dan
Rua, that's right. Holy cow. And Nora Mosley Partners and Gray Ventures down in Atlanta.
Yeah.
But locally,
Bernie Gray, still going strong.
Bernie Gray, exactly. Bernie and Alex.
Yeah.
I also heard from, at the time, the local ones here. I would have talked with like Aurora and Inner South, but I think we were too young, too early stage for all those guys, really, at least initially. And so, but we also were connected with an angel group, and I don't remember exactly who made the introduction, but it was Tri-State Investment Group, TIG.
Yep. Yeah. So you did TIG. I think it was a Triangle Investment Group back in the day.
Okay. I remember Tri-State Investment Group, but I could be wrong.
Maybe there's one. Did you go to First Flight, the old First Flight, and have to go into like the weird, I call it the Ebola auditorium?
Totally, yeah.
It's like totally
dirty. There was this huge conference room. I remember it too, like presenting in front of the angel group. I was so nervous. Like, there's like 60, angel investors around the table, and you had to get up. Taylor and I had to get up and present. Back then, I would like write out my words on a note card, like every word I was going to say. And I think I read off note cards our pitch. But as rough as it was, we managed to get them behind us for, I think it was just shy of $1 million.
Wow.
I think 800,000 or 850,000 is the number I have in my head.
Wow, that's amazing.
But here's an interesting story for you, like an intersection point that we share that you also might not know is that, we got the term sheet from them and they had to do tech due diligence. I think, and so they came out to the farmhouse and the guy that they had recruited to come basically vet our code was none other than Dave Spitz. So here comes Dave Spitz, and he had just sold his company called NetSation to Nortel, or Bay Networks became Nortel. So he's this, in our eyes, like he still is like this super successful older guy, and he comes over and he's driving like this fancy black Corvette, I think.
Probably a Porsche. He's a
Porsche.
He's a German car.
It might have been a Corvette back then.
It could be. Yeah. Cool. And then he comes to the farmhouse and like, let's look at some code.
Oh yeah, and we totally pulled the wool over his eyes. I don't think we had anything, but I'm sort of kidding. But we had built, the search engine, and he sort of thought, he gave his 2 thumbs up, and the rest is history, as they say.
Interesting.
So we were off to the races.
You made it through the Spitz due diligence.
Made it through the Spitz due diligence.
Yeah, I don't know if you would now.
I should add that to my LinkedIn profile.
The pitching the TIG was it was before Shark Tank, so you didn't know what you were up against. And it was like such a motley group. It was kind of like the Moss Isley of pitches, right? So you'd go in there and half of them were like these older doctor type people. And if you were tech, they would just ignore you. It was almost like they were there for biotech and they would like read a paper or something. So it's like really discerning because there's like half of the room was just purposely ignoring you. And then the other half was kind of engaged. And there would always be one that would be like the Simon Cowell that would like poke a hole in your idea out of left field. Mine, I had a guy, his name will pop to me as I talk. He had made all his money in cell phone towers, and I'm pitching Auction Rover. He's like, I'm from the cell tower industry. Explain this as if, and use, help me understand it from a cell tower perspective. And I'm like, at that point, we didn't have mobile data. So I was like, I have nothing to, he's like, well, are you going to, like, what are you building? What are your assets? I'm like, it's software. There are none. He's like, well, then there's really nothing there. Right. And I'm like, well, Microsoft's just, like, it was like such a left field thing. Like I'm arguing the value of software against a cell tower guy. Cliff.
Yeah, no, it sounds really familiar. I think I had a similar
that?
conversations like that.
Everyone that went through it was like, what was that? But then you would think I did so poorly. Half the audience was asleep. This one guy like drove the conversation to a weird place, but then like they would write checks. So it's like the weirdest outcome of all that. And you would meet really good people. Like I think that's where I met Robbie and Ed Whitehorn. Did you meet him?
Yes, Ed Whitehorn was one of the original ones on our board.
Yeah.
Robbie was an advisor. So
there was like this kind of goes to the quality. So if you go there and you feel like you did a bad pitch, if your message resonates with one or two people, it can kind of get you over the hump for. Also
Bruce Bohm, if you know Bruce, Bruce was also one of the early TIG guys, and
it's interesting. Okay, so you pitch, you made it through the Spitz filter, and you get your 800K. And then did you upgrade the farmhouse, or did you stay there? What happened next?
No, so we I think this all closed in August of '99. So think back to the timing, and I was supposed to show up at Stanford like a week later, like Labor Day weekend. And I was like packing my bags. I think my flights were booked, to go to Stanford and start college. And so I had to make a pretty big decision, but it was an easy decision. This is like, I was caught up in the .com euphoria, and I'm like, this is the dream. So, and luckily I had chosen Stanford. Stanford being in Silicon Valley, they had a pretty flexible deferral program. So they're like, yeah, just take a year off. Good luck with your startup.
Yeah.
So that made the decision really easy.
Yeah. Very cool.
And then we moved into an office on Meridian Parkway. So back then, it was next to Constella Group, Don Holsworth.
Yeah.
I think we subleased space from them. But this is, there was no American Underground. There wasn't WeWork. There wasn't Raleigh Founded.
Yeah. And you had to sign like a 7-year lease.
Probably. Hopefully not. But yeah, it was like a sublease that,
we always did. And I'm like, my business is 3 months old and I'm signing a 7-year lease.
Right.
I better get as small a space as possible because I'm going to be paying for this for life. Yeah.
Exactly.
Yeah. Meridian was nice though, because they had that little cafeteria on the in building that was pretty good.
Right.
I can't remember the name of it, but that was scummy.
I totally remember that cafeteria right at the entrance. And then there was, I think the other thing too is like the hot companies, the hot startups all seem to be on Meridian Parkway too. Red Hat was directly across the street from the building that we subleased. Open Site was like one building down, and those were, very high profile startups, at least to me.
Yeah. Yeah. Michael Brader-Arahe.
Eric Trone was on the advisory board for us, which was really a neat experience. So.
Cool. All right. So now you're in the big leagues. Did you start hiring people, and like, how did you scale this thing up?
I don't know if we were in the big leagues, but at least we were, going at it. And we started hiring people, probably hired way too fast, thinking, the .com, we're going to be at 5 or 10 million in revenue tomorrow. We started signing up customers, and we also came up with a new name too. Somewhere along the line, I hired a really talented product and marketing guy named Dov Cohn. You mentioned OpenSite. That's what made me think of it. So we recruited Dov from OpenSite. And I think I credit Dov with like coming up with all the names of my companies. So, he was like, this Intertech thing, it's not going to work. I think that's my memory of it, at least. So we ended up going with Pinpoint. And that seemed like a much better name for a search engine. And somehow we were able to get the .com for that too. So
yeah, that was a good one. You had a cool logo with like a little.
Yeah, you remember that. Yeah.
Mm-hmm. Yeah.
People still sometimes like send me swag that we must have made, the marketing team. And we hired another guy named Eric Harbour, who was one of Dave Spitz's colleagues at that startup NetSation that I mentioned.
Yeah.
So Eric was like the EVP of marketing, and we hired salespeople, and Robert Dale is engineering, and we started building a company.
Cool. All right. So you're out there, and your revenue model was software licensing, kind of like what we'd probably call SaaS today. So you would license it for some recurring revenue for people that needed a search engine.
Exactly. And sometimes, though, you remember how the internet deals were. Sometimes you'd go into the deal and it's like, it wasn't clear who was paying who. I remember we were doing a deal to be the search engine for the Olympics, NBC Olympics, I remember. And so we were discussing terms, and they said, this could be a $500,000 deal. And I'm thinking, wow, this is going to be our first significant revenue contract. And when we sent over the deal terms, they said, no, you pay us $500,000 for the right to be the search engine.
Yeah.
I think that's when I started to realize the internet economics weren't really adding up. But the idea was that we were going to get paid per search, And that was a model that Inc. to me had come up with.
Yeah. Yeah.
And we signed up, I want to say like 50 vertical sites. So
wow.
The biggest one was Lycos. Do you remember the name Lycos? Of course you do. But
after the dog. Yeah.
I've asked some of the younger entrepreneurs, they're like, who's Lycos? Don't remember that one. I remember visiting them up in Pittsburgh. That was probably the biggest one. We had the American Kennel Club, which is actually based here locally. We had Total Sports. We had golf.com, soccer.com. So those kind of sites that we were powering.
Yeah. And for each of them, would you have to go change the code, like to only return soccer stuff, or was it just the same search engine?
That was at least the idea. The algorithms weren't nearly as good as they are today. I think we could actually probably pull this off better today.
Yeah.
But it kind of worked.
Yeah.
It kind of worked.
Yeah. I think it's make it. All right. And then somewhere in here, the .com bubble's about to burst.
Right.
Yeah.
So right before that, fast forward to the peak in my mind, March 2000, right? Open site, maybe it just gotten bought for hundreds of millions of dollars. Auction Rover had gotten acquired. Red Hat had gone public. And we, at the top of that, were able to raise a $5 million Series A. And that was Wakefield Group out of Charlotte.
Yep.
And Nora Mosley Partners down in Atlanta, which was one of the firms that I had shipped my FedExed my original business plan. They had a copy. They never looked at it, they said. But in any case, we were able to raise $5 million at the top of the market. And
at Wakefield, you worked with Steve Nelson.
Exactly.
And then you haven't seen it yet, but the Chris Evans episode, he also raised money at Accipiter from Wakefield.
Yes.
And I think that was before Steve had joined. There's a family in there. I can't remember their name.
The Spangler family.
The Spanglers, yeah.
Yes.
Yeah.
That's Steve's brother-in-law.
Yeah. Two of the Spanglers actually did that deal. Cool. So you did a $5 million round, which was pretty big for the Triangle at the time.
Pretty huge. Yeah.
And your timing was either excellent or poor.
We presented.
You would have survived if you hadn't had that done.
Totally. We would have absolutely gone out of business immediately. That gave us the runway to sort of survive the crash. But I recall presenting at the Red Herring Venture Conference in Atlanta. Mm-hmm. And I think that's where we sort of, we were already talking with Wakefield Group and Nora Mosley Partners and a few other firms, but we closed the deal there, and it, was funded in March.
Was Red Herring, it wasn't Calcanis, was it Michael Arrington?
I think it was Michael Arrington.
Yeah.
Because it's way back. Yeah. Now I think of it as like the venture conference in Atlanta is like the big thing. But back then it was this Red Herring event that they would do in Atlanta.
Yeah. And there's a magazine, the Red Herring magazine, that you would like, that one and Business
2.0.
Business 2.0. Yeah. Wired started covering all kind of this stuff. How close was it from closing that $5 million round to it was Rip Good Times that Sequoia put out, right? That was like, and then it showed up on a magazine around this time frame. Was that days after you closed or a couple months?
I don't remember. It's a bit of a blur. I feel like things were good for a few months and then it quickly got bad.
It was like instantaneous.
Right.
It wasn't like a slow decay. It was like, it's all done. Yeah, it's crazy. Done. And then somewhere in there, Accipiter sold to CMGI. Do you remember that one?
Totally. Yeah. I had the chance to get to meet Chris a couple of times during that. And we actually hired our first sales guy was someone who had been at Accipiter. So Chris was a reference and helped set that up. A guy named Doug Edwards.
Yeah. Cool. All right. So here you are. You're, at this point in the story, you're probably 18, 19. Mm-hmm. You've raised $5 million and then the bottom falls out. What did you guys do?
Yeah, I think what's crazy is like two terrible things happened at once. So not only did the bottom fall out, and I mentioned that story where like the NBC Olympics wanted us to pay them $500K. Like that started to happen, and basically a lot of the customers started going out of business or couldn't pay their bills.
Yeah,
we'd closed a big internet deal in Europe. I remember it was our first like major contract where we were getting paid, and they stopped paying their bills. That was like the writing on the wall. The NASDAQ crashed, the funding market, the sense was it dried up. And you always see this stuff too late. But then there was another thing too, which is we were two 18-year-old kids. And as part of the funding, the deal was we would bring in an adult CEO, like on a micro scale, like sort of like the Google guys brought in Eric Schmidt, right? Yeah. So we brought in initially a fantastic guy named Jim Strathmeyer, but he was more almost more like an advisor. He was a member of TIG. I think he's moved away.
Yeah,
I've run into him every now and then at Duke games, but he would have helped us get that $5 million funding round closed. But then we did a search, like a retained search, and brought in a CEO named Anthony Blake, Tony Blake. And it turns out he was like a total fraud.
Whoa. Okay.
And
as in like, stealing money kind of fraud, or just like
the kitchen sink. He wasn't who he said he was. He lied about his background.
Wow.
He had been hired based on his, customer relationships and past successes and venture relationships. And by the way, the .com thing was blowing up so quickly. I don't know that any CEO could have navigated that. But it's really bad when you have a fraud who's siphoning money and things like that. So and I'm Taylor and I are 18 years old, but we have raised $5 million of funding, and there's institutional investors around the board. And Steve Nelson, I don't know if he was the chairman of the board yet, but he was by de facto serving in a chairman role. And it was Steve and I that uncovered this.
Let's pull the thread on that. So what made your spidey sense tingle to kind of start digging into this?
I mean, things just didn't add up. Like we knew we needed to raise more funding. So this is probably later in that year, right? And the market's crashing. But I remember like going out for a trip and it just didn't add up. I can't put my finger on it now. It's been so many years, but I remember Steve and I looking at each other like, is everything right? But you want to believe, you want to think he's right. That's how it always works with these things. And I think what eventually tipped me off is I heard from a past colleague of his that had heard of us as the company. And I'm sure there was an article in the TVJ or the News and Observer about hiring the CEO. And so someone saw that and reached out to me and said, kind of a cryptic note, but
keep an eye on this.
Keep an eye on this guy. Do you know what you're doing? This isn't, it's not all adding up. So we started to dig a little deeper.
Was the kind of thing you went out to do meetings with him, and like suddenly a lot of them were canceled and there's like a lot of excuses.
Yeah, exactly. Stuff like that.
Yeah, I've been around people like that, and they're always taking weird phone calls at weird times and like, making it seem like a big deal or something. And you're like, but they won't tell you details. Yeah.
Right.
Whenever there's like a lack of transparency, you're kind of like, this feels weird. So how did you guys deal with that? Did you have to just, could you like summarily fire him, or did you have to like do a bit of an investigation and build a case?
Yeah, a little bit of that, but it was kind of condensed. And, I remember distinctly, like, we figured it out, and like Steve met him at the airport because he was living on the West Coast. That was part of it too. So he would come in for a week or two and go back. And Steve met him at the airport and told him get back on the flight. This was back when Midway Airlines was doing that direct flight back and forth. And so, and I never saw him again or heard from him again. But it plunged the company into crisis, because by the time we figured that out, I think we were down to 2 weeks of cash. I mean, we were down to our last payroll, the proverbial last payroll.
Wow.
And frankly, the company probably should have just folded at that point in time. But I think, no one wanted to give up, and no one wanted that sort of failure in front of us. And it was a moment for me. I think I'm probably 19 now, where I really grew up. I realized, okay, I gotta figure this out. The .com is so over. If we're gonna build a business, we gotta really hunker down.
Yeah. So then, how'd you survive having just 2 weeks left?
The first thing is I called Taylor on a weekend. I remember sitting at the table in the old conference room on Meridian Parkway. Yeah, we like basically laid off most of the team. We figured out the names, and then we laid off most of the team and skinnied down. And then I went to the board and the investors, and I said, look, there's sort of two options. We could shut this thing down now. I'll go back to Stanford, and you guys will write down $6 million of capital between TIG and Wakefield and Nora Mosley. Or that's when I learned what a bridge round was. Probably got that from Bruce Bowman. I was like, or we can do a bridge of $1 million. And I've skinnied it down, and let's try to navigate this.
Yeah. Okay. They chose
option 2. So we were able to get sort of roughly another $1 million, and with the much, much smaller burn rate, which if I'd gone back, I probably would have made it even skinnier. It's always that, right? Like, but it's hard.
Too late, not enough.
But these are like really tough lessons to learn as a 19-year-old. I mean, it was like, wow, I couldn't have gotten this at Stanford or a business school, right? So it was like the school of hard knocks. Now it's not the euphoria of 99 anymore. It's like late 2000, early 2001.
Yeah, it's different when you're reading a case study about, and then Dell reduced headcount by 30%. Next paragraph, you're having to go, these people, you hired them, they have kids, this, there's no jobs right now because you were in the middle of a crazy, recession kind of thing.
Right.
Yeah, so that's tough. Yeah, I feel your pain on that. I've had to do it many times. But that's what, that's the downside of this founder thing. This is the eating glass part of and staring into the nebula. So you guys skinnied down. The other thing it took me a while to learn is when you have institutional investors, they have reserves, and you can tap into those. They're like literally dollars set aside for you, which is kind of, I tell a lot of first time founders that like, well, go talk about a bridge round. They're going to have money in there. You just need to figure out how to unlock it.
Right.
So another good lesson for first time founders watching us here.
But I also think like it's not for everybody. They reserve for everybody, but it's not like a guarantee you're going to get it. Like in theory, the fund wants to keep the reserve for the best companies or the ones that show promise.
Them to give it to you that you're going to become one of the best companies again. That's all you'll need to. Yeah. They also don't want to, they call it a peer, like a bridge to nowhere. Everyone's used that one on me.
So think about it, like not only had the dot-com boom crashed and we had to lay off like probably 3/4 of the staff, and we had a fraudulent CEO that we had to fire who had siphoned off a lot of cash. We're now on a bridge loan, but then all of our customers went out of business, like pretty much all of them. Yeah. The American Kennel Club didn't go out of business, but all the dot-coms went out of business, which was like 90% of the customer base.
Yeah. So another good founder lesson is diversify your revenue streams.
Yeah. Diversify revenue streams.
Mm-hmm. Okay, well, you skinnied down, so you made the hard decisions. You got your $1 million bridge. How did that play out?
So around that time, I had gotten a phone. I can't even remember the model of it, but it happened to be the first phone that could access an early version of the internet. Yeah. And it was called the Neopoint. That's what it was, the Neopoint. I think Taylor got one too. And there was this thing called WAP and HDML. Mm-hmm. And, kind of stick figure of black and white internet. It's such a far cry from where we are today, right? But that was one of those eureka moments that I was like, okay, this is going to be huge. Just like, the first time you tried out ChatGPT recently, it's like, it's that kind of euphoria, or the first time, you searched on Google. Seeing that phone was like, this is going to be crazy. This is, we're going to have these in our pockets and be able to access the internet. So, our customers have gone out of business. We built a search engine. The tech was, at least good enough to pass the Dave Spitz filter. But, I think we said, how about we made a pivot. Let's pivot to be a wireless search engine. No one had done that. And I think it's a fair claim to say that we were the first wireless search engine, if not one of the first in the US.
And you needed that because, at this point, Google was ascendant. You couldn't just go to Google on your phone because it would return all these sites that weren't mobile friendly. So it was totally useless. So you needed someone to apply a filter that said, I'm only going to return to you phone, to either like transcode the site so that it could be mobile friendly, or filter by, is this site mobile friendly? Yeah.
There was all this transcoding going on. There wasn't much content, but we indexed it. I think we'd gotten up to like 5 million websites that we had indexed somehow. Yeah, so it was like a little index, but it was big for the times.
But you're no longer Meta, you're building your own index.
Yeah, we started building our own index.
Getting pretty serious.
So, it helped that Google had actually published some white papers on how to do this too. So we didn't have ChatGPT to like instant code a crawler and everything for us. But so we built out the first, wireless search engine, and we had been talking to some customers by coincidence, like for the original product, but like it kind of was a way to get an entree point into the phone market. So so Lycos was one of them. They were really interested in having us. They had no really wireless team, and Lycos at the time, no one knows who they are now, but they were like the number 2 portal after Yahoo. So we were talking to Excite, Lycos, GoToNet, InfoSeek, all these like huge portals. We even had meetings with Yahoo, but they had their own thing. And we struck
AOL
a deal.
AOL,
we had meetings with AOL. I think we did a small deal with AOL, but like Lycos was the big one, and we powered their wireless search engine. But the thing is, it was starting to be clear that even these big portals weren't going to make it. And we also were talking to what became Verizon. It was like GTE. I think when we did the deal, it was Nuco Wireless Partnership. So it was like the precursor to Verizon. And we got a deal to power Verizon. And then shortly thereafter, British Telecom and Rogers up in Canada. And to sort of be the search engine for those phone companies for this new WAP world.
Which is nice because you're just like installed. It's like basically being installed on the computer. You're installed on the phone. You are the default.
And unlike these .coms, Verizon could pay their bills. And so we got a deal that was like, we got paid per search, a penny or something, and maybe a fraction of a penny. But and there wasn't much volume initially, but it started to increase. And so I think that's around the time, we had hit bottom at this point. We started hiring again, very, very slowly. And the revenue was still super nascent. I want to say probably less than $1 million, but in that ballpark. Mm-hmm. But we were able to show like a hockey stick. We were able to show like searches on Verizon phones, going up and to the right. And with that momentum, we decided, okay, let's go raise a Series B. Now it's probably 2001, 2002. Like the bottom was there, and we thought, okay, there's a real business here.
Yeah.
And
the internet had cratered, but
right.
there was this, this other wave, which was mobile, kind of like now
right.
forming kind of on the other side. So, yeah.
And I'd learned a lot at this point. I'm the CEO. I think it was an interim for a while, and then they named me CEO, and I went out on a fundraising trail. And I got intros. I knew that you can't just cold call an investor anymore. But the folks that were on that founding board, folks like Bruce Bohm, Steve Nelson, they made intros to tier 1 and tier 2 venture firms all over the country. And mm-hmm. I started going to those pitch meetings. But I faced a wall of rejection, like no after no after no. I think, things were still really tough. It was still a tough fundraising environment.
Yeah. Did the history of Pinpoint, was that kind of an anchor part of it too? Or they didn't like the story, or you didn't get good feedback? It's just a solid no.
I mean, it probably wasn't a very good story. I mean,
yeah.
Look at all the craziness that we'd gone through. Like, I think every startup goes through that, and you can only sort of talk as openly about it when it's like 20 years in the rearview mirror, right?
Yeah.
There ended up being a happy ending with this, right? But like, it was really brutal, and it was so bad that we got 50 no's. I still have a list of them. I probably somewhere on my laptop, because I had a pipeline. I was sort of tracking, all these meetings from big, well-known VCs to, I remember going to a venture firm in Kentucky, got no from them as well. And at that point, it gets worse. Like Stanford called me, because it's like the summer of 2001, probably, yeah. And Stanford said, the dot-com boom ended, and we're going to stop the deferrals. So like, if you don't matriculate, by September, whatever date, like you're going to lose your spot and your scholarship at Stanford.
What'd you do?
It was a tough decision. And both my parents are teachers. So you can probably guess what they said to do. I went to my grandmother. She had been an angel investor along with Tig. She was an amazing grandma, but, she's like, Stanford's a great school. And I think one of the deciding things actually is one of the partners at Wakefield Group called me sort of off the record. He had gone to Princeton, mm-hmm. and he was like, you're crazy if you don't go to Stanford. Like, you got to go. Yeah. So I went. Okay. I booked a flight and went to Stanford.
Cool. Were you going to CEO and be a student at the same time? Was that the plan?
I don't think I had a plan figured out. I just was like, I can't give up my future. The company's down to its last cash. We're on the fundraising trail. I've just gotten 50 no's. And I remember I was, moved into my dorm room in Robley. It's like a quad, going through orientation, which is like, I think like a 2-week process at Stanford. And I was flying back and forth still doing fundraising meetings. I still had a few more meetings on the calendar. And somewhere in that time period, I presented at the CED Venture Summit too. Mm-hmm. And I think, to make a long story short, we got up to 58 no's, but the 59th investor said yes, which was Massey Birch Capital.
And where are they out of?
Nashville, Tennessee.
Okay.
They're not around anymore, but they were famous for being the original investor in the Colonel back in 1969, who had a secret recipe. So Kentucky Fried Chicken. Yeah. So that shows you though how far I was casting the net to find investors.
You went all the way down to the chicken guys.
Yeah, an incredible guy named Bill Earthman.
Yeah, but it's almost sounds like a little bit of a family office. Sometimes family offices can be helpful because they're less lemmings with some of the VCs. Kind of thing. So
they had also backed AOL or super early on too, though. A guy named Ted Leonsis that founded Redgate, which merged into AOL. So.
Yeah, interesting. Cool. And then so they did a Series B. Did they wash out the A, or they just went on to they didn't do a cram down or anything?
They were gentlemanly about it. I do remember it being a bit of a down round, but not a cram down.
Yeah, good. Okay. How much did you raise in this kind of Series B?
So by memory, they put in $6 million. So it was just, just barely more than we had raised in the A. But what was amazing is like once I got one yes, I got a few more yeses. Like that was like the deciding point. So we did a first close, but we left the round open, and we ended up raising. And I think the valuation might have changed along the way too. But we ended up bringing in a fantastic firm called NEA, and NEA became a co-lead along with Massey Birch Capital, and Intel Capital invested as well. Mark Rostick.
Mm-hmm. I see him at my gym almost every morning.
Yes.
Shout out to Mark. I have to mention that you should watch this. Who at NEA was your partner?
Suzanne King.
Okay.
But before Suzanne, there was actually a partner named Faisal Beg. And so he sort of sourced the deal, and then Suzanne became the board member.
Yeah, and they're up in Baltimore, so yeah.
That's right. Yeah, Chevy Chase.
Yeah, they let our be at Channel Advisor.
Right.
Which would have been, what time were we in? 05-ish? 02.
Yes.
Yeah, this was way after you. Okay. Well, this is even worse in a way, though, because now you're committed to Stanford and you've just raised a bunch of money.
Right.
Did they know you were going to Stanford? Was like that part of the pitch, or did you like maybe not mention that?
I think I kept that part secret. Yeah. Kip Johnson's been our attorney the whole time. He's probably groaning. He's probably like, "Oh, was this in the schedule of exceptions?" I don't know. But the way it played out is, it might surprise you. I don't know about you, but like I'm actually an extremely risk averse entrepreneur. Mm-hmm. So like, which is kind of paradoxical to being an entrepreneur in the first place. Like entrepreneurs take a lot of risks, but I always hedge when I always like to think of it as like a hedge. So like knowing I could, go back to Stanford at any point was a huge hedge on my future. Mm-hmm. And having this like not having the ability to go back to college if the company failed was scary.
Yeah, freaked you out.
And they weren't going to let me defer. Like I tried everything to defer, but mm-hmm. I was able to sort of find a loophole, which is if I enrolled and attended class, the registrar's office was willing to give me a leave of absence, like a dropout, basically.
Okay.
So I was no longer deferring. I attended Stanford very briefly.
So you did more like
a few weeks.
You withdrew,
and then I withdrew.
But that gave you enough of a hook to kind of like kick it another year.
Yeah, they were like, you don't have to apply. I was able to kick it another year. I don't know if it was fully defined. I'm sure I can't go back now. Yeah. As a 43-year-old dad,
I'm back.
Live in the freshman dorm.
It'd be fun. There's a movie, Old School.
Yeah.
Could join the fraternities.
I love movies like that.
Yeah. Okay, so that was so you're in and out. So now you're back over on Pinpoint. You've raised north of 10 million.
Yeah, I think 14 million maybe.
14 million.
At this
I remember
point.
it being really big. Yeah.
Yeah.
Yeah. So you went from like 58 no's to 59, kind of lighting up a $14 million round. That's crazy. Yeah. Yeah. That stick to it. It is about grinding it out sometimes and getting to that. Every no is a path to a yes. Ultimately.
Perseverance.
Sometimes it's like, how do I get through all these no's to get to the yes? It's in there somewhere. And then, so part of your business plan was, so it's kind of like Pinpoint 2.0. We're going to really lean in on this mobile thing. We're going to be the mobile search engine.
You're going to be the mobile search engine.
Yeah. So you took that fresh capital and you didn't hire a bunch of people this time because you learned your lesson.
We still hired a lot of people though. Yeah. But I think in a different
more judicious. Yeah.
Way more judicious.
Yeah.
And I think at least at this phase in the company's trajectory, but it wasn't all roses and sunshine yet either. Yeah. So we signed up a few more phone companies, but sometimes you can be too early. If we were the first wireless search engine, there still weren't that many internet capable phones in the market. So we were getting paid per search. It was a nice business model, but it wasn't enough revenue to like build a true business. Plus, there wasn't that much content. This was black and white screen still. There wasn't, much interesting stuff to search. Yeah. And also Google, was quickly awakening to this wireless internet too. So they launched a Google wireless search engine, which, arguably was, better than ours, probably, certainly, right? So that all those pressures, but they weren't necessarily licensing it to the carrier. So we still had this play where we would say, okay, you can still do a deal with Google, but you want your Verizon search engine. So that was kind of the pitch. But basically, we were running into some struggles where it wasn't working exactly. And so we basically began what was sort of pivot number 3. And that's like the most important pivot for the company. And we were basically trying to find a way to get more content for the indexer. Mm-hmm. You could have a crawler, but there wasn't this like hyperlink structure with all these transcoded content. So it wasn't like in today's internet where it's easy to crawl around. I mean, you couldn't. So we actually had we would hire kids out of UNC and they would, kind of look for content. We would throw it into the indexing. And so anyway, one of the ways we did that was looking at what people were searching for. Mm-hmm. So if someone's searching for some website, we're like, okay, they probably exist. Let's look for that. Let's index it, right? And people started searching for something called a ringtone, which we'd never heard of.
Yeah.
And it quickly became like the number one thing people were searching for. It was like 98% of the searches were for ringtones. And then it was, after that was games, and then, websites that we were indexing.
Yeah, so, there's an important founder lesson here, which is look at your data every day.
Look at your data.
Yeah, and it is the guide. You can never predict consumer behavior, so don't even try. I've learned that lesson 1,000 times. We think we have our taste and we're going to we know how people are. You can never guess. Just put it up and then get the data and iterate.
Right.
So you saw this data. Everyone's looking for this thing called a ringtone. And then you would probably say, well, let's go find ringtones. And there probably weren't a lot.
Yeah, there probably weren't a lot, but it was even worse than that. We didn't even know what a ringtone was. So first we did a ton of research, and we learned about this company called NTT Docomo, which is the Verizon of Japan. Mm-hmm. And they had invented something called iMode, which was like the world's first app store.
Yeah.
And there was some similar ones in some of the places in Europe. And so we basically got really smart really fast. And we started having conversations with these carriers that we were working with, Verizon, British Telecom, Rogers, et cetera. Hey, we have this search engine deal, but we think there's this huge opportunity with ringtones, maybe games. We're building a platform.
Wallpaper. People would buy wallpaper back in the day.
We basically, it was kind of vaporware. Yeah, wallpapers as well. Wallpapers were big. But it was a little bit vaporware. So we had PowerPoint slides, and we had a new name, a product name called Fuel, which we thought was really cool. So Pinpoint's Fuel platform for ringtones and games. And we hadn't yet built it, but the engineering team is sort of here in Durham, in Meridian Parkway, building this platform. Meanwhile, we're going around talking to all these phone companies saying, hey, look at this NTT Docomo thing. They're making like billions of dollars off ringtones. There's an opportunity here. The phones need to catch up, but we've got the platform. Let's do this.
Yep.
And it was another one of those cases where we were like probably a little bit early.
Yeah. But, being early can be good too. Because then when the wave hit, you saw the wave. So I would argue if people are searching for it, they wanted them already. Maybe you were ahead of the phones, but you weren't ahead of the consumer.
Right.
Yeah.
But think about it. We're on our third company name. We're now on our third business idea. It's only been 3 years. So it's a little, but we had the backing of some great investors, fantastic investors. And I don't want to say they lost confidence, but I think they started to get a little worried. Because we were starting to burn through that $14 million. There was still plenty of cash in the bank, but we were burning a couple $100,000 a month, which doesn't seem like a terrible burn rate, but at the time that was a pretty big burn rate. And 9/11 happened, so we're kind of post.com, but it's also now post 9/11. So the world is very somber, and our revenue is stuck at $1 million. It's so I think that the investors started to think, okay, is this going to work? Or are we too early? Are these ringtones, they're not going to be a thing in the US market? Those were the kind of questions we were talking about. And
do these entrepreneurs have ADD? They keep changing their mind.
They keep changing. And now what am I, 20 years old? And we actually became a finalist. So I think the market was maturing, and Verizon and Singular, the two biggest phone companies in the US, were doing an RFP. We kind of convinced them of this opportunity, and okay, we need to do this thing.
Yeah.
And we're gonna build a ringtone store. Mm-hmm. And so we were able to get in the mix as this 40-person startup in Durham. And we were, as best I can remember, we were competing against an IBM, some sort of custom but enterprise grade built custom thing for Verizon and Singular. But we got in the mix, and I remember we were named finalist at both the Verizon and Singular ringtone store opportunity.
Cool.
But revenue was stuck at $1 million. We're burning cash. And what I remember, and it may not be completely fair, but I remember being in a board meeting, and Charlie Mosley of Nora Mosley Partners was like, I'm just not 100% sure, where are we going to be if we lose both of those deals? We might be right about the idea in the market, but is this 40-person, are we really going to be able to pull this off?
Yeah. And unlike searches where you got paid in the future, these were presumably they were going to pay you a big upfront to go build this thing, hundreds of thousands of dollars, I would imagine, $500K or something.
Yes and no. Maybe that was some of the initial conversations, but one of the things that we pivoted to in the negotiations was like, hey, we perceived the competition was going to be charging millions of dollars for this custom solution. So we said, we really believe this is going to be huge. So we'll do it for $50,000 plus a royalty on every ringtone.
So you bet on the future. Okay.
We bet on the future. But, I'm going into a board meeting sort of pointing to what's happening in Japan. I had some Japanese phones, which I was using as my props, going around to the phone companies and showing my investors and saying, like, look at these. This is going to happen here. But meanwhile, people pull out their ancient Motorola and they're like,
flip phone.
It's hard to really think that that's going to actually happen. So in where I'm leading up with all this is, as a board, we basically were risk averse, and we said, we need to hedge our bets, because the sense was we were going to lose those deals.
Yep.
And we ended up doing, one of our investors was affiliated or had invested in a company in Nashville. So it was orchestrated by our Nashville investors, a company called Power by Hand that was founded by a super ambitious entrepreneur named Ryan Wirch. And Ryan had built kind of an app store business for Palm Pilots.
Yep.
And, I think at this point in the market, it wasn't as clear and obvious that the Palm Pilots and BlackBerries were going to die off. But he had built arguably the first or second largest, app store for these PDAs. Is that what they were called?
Yeah. Mm-hmm.
This is pre-smartphone, right? But like he had something on the order of magnitude of like 10 million in revenue. And we had $1 million in revenue.
Yeah.
And the long and the short of it is we ended up doing a 50-50 merger.
Yeah.
And at least from like the Pinpoint board, there was an element of it's like a hedge. And I think, I don't want to speak for Ryan, but like as I look back and kind of think about it, I think Ryan was running out of funding and wasn't able to raise new funding because he's Palm Pilots. So he saw that we still had a chunk of that 14 million in the bank. So it was like a funding event and sort of a hedge on both sides.
And also it was a multi-platform. It made the company multi-platform versus single point of failure on Palm.
Right.
Yeah. So there's a lot of, kind of makes sense in a way.
So we did a 50-50 merger of Power by Hand and Pinpoint. Ryan was named CEO. I'm named president. I think there were 4 people that could sort of think of themselves as co-founders, right? Yeah. And we renamed the company to Motricity, which is that's a name that Dov came up with, Dov Cohn.
Yeah. Yeah, it doesn't seem like it would work, but it passes the test of you could tell someone about it and they would be able to spell it.
Yeah, we got a lot of Motricity, people maybe, but generally it worked, and it was a word that no one owned, and it's a real word. It's like a medical term that meant something like I should remember this, like the movement of muscles, maybe.
Yeah.
So it had kind of okay, that's kind of cool, movement, action, energy, and it had motricity. So we liked that, mobile and electricity.
Yeah, and where you're kind of like a North Carolina authentic founder, you're not shy, but you're not like wildly self-promotional. Ryan Wirch is like, he's like cranking it up to 12. I've had several interactions with him, and he's a sales guy. Son of a preacher. He had like this I'm sure you heard the spiel 1,000 times. I've probably heard it 5. So that was kind of an interesting change for the company from the outside to it was like a new CEO that was like just so totally different from you. It was a very different vibe.
Yeah, I remember like some of the angel investors that he had described him as like so much energy, and he'd be going around you like so fast you couldn't even really see. It was,
it was like a proton. Yeah.
And so it was kind of like a marriage of convenience, honestly. Yeah. These two coming, and then you're dealing with like the culture and how do you integrate the teams, and like, are we going to base the company in Nashville, or are we going to base it Franklin, Tennessee? It was just outside of Nashville. Yeah. Are we going to base the company in Durham? All those kind of cultural
today
shocks
that would be a real decision. Back then, Nashville had nothing going on. We were we're still ahead of them, but they were like, and they're really known for health tech and biotech, way in lots of hospital systems.
Yeah, but it was not an obvious decision, and I think huge kudos to Ryan and his wife Chantel and his co-founder Nathan Gooden on making that decision. I mean, because they had children, they like uproot their families, come here. Yeah. Ryan ultimately made that decision, and I think that was a pretty important one.
Yeah, she's a Miss America winner.
Chantel, that's right.
That would also come up in a lot of the pitches. There's like a whole thing. Cool. So then they moved down here. So you said you guys were at $1 million and they were at 2 or 3?
10.
10. Okay.
So we did a 50-50 deal. And I think, I'm thinking, okay, well, now we own 50% of an $11 million company.
Yeah.
Multi-platform. We've still got cash in the bank, a stronger team.
Yeah.
So like, yeah.
Yeah. So then things somewhere in here are going to really take off.
Yeah. So, I mean, then there's this lucky moment, like in any company's history. And, we had effectively gone into this merger, sort of betting against ourselves, right? I mean, we were basically making the probability adjusted decision that we were going to lose those deals with the phone companies to be the Ringtone store. But it turns out we did lose the Verizon deal, at least initially. It came back many years later. But we ended up winning the deal to be Singular's Ringtone store down in Atlanta. And it happened, as I remember, 3 or 4 months after we merged the companies together. So it was pretty close to it. And Ryan gets credit too for he joined the sales team and he's spinning around all the AT&T, Singular executives. So but it happened. We closed the deal.
Did you go to the board and say, told you guys?
No. Because now it's like, well, wow, this is even better, right?
Yeah.
So,
Yeah.
And it was like one of these moments, like when we finally, remember this, we had sold a bit of a vision, a bit of vaporware, but we had to catch up to it. And we finally built it. And they had a commercial once about something like this, where the servers get overloaded. But the day we launched on Singular, we flipped the switch to turn on this Ringtone store. It crashed all of our servers. Which, by the way, usually success is obvious. That's what you want. That's the moments you live for.
Yeah, it's a high-class problem, finally.
And it crashed it so bad that I thought we were going to lose the contract. We were able to negotiate with Singular to get a second chance.
Yeah.
Hey guys, we had no idea. We got this.
Yeah. At this point in time, there was no cloud, so you couldn't just turn up more servers.
Yeah, exactly.
We had to host everything, and it was very expensive.
What was that company? Dataflux and Hosted Solutions. Rich Lee. That was kind of what we were where we were doing this, and
it was expensive.
Very expensive.
Yeah, I need 200 Dell servers.
Right.
That's going to be $800,000, and it'll take 6 months to ship them to you.
Right.
My site's down right now.
So I mean, huge kudos to Jeff Kramer and David Lux and Josh Bankowski and Taylor Brockman, names like that would have this whole team rallied. And when we turned the Ringtone store back on, the first day of revenue was $1 million.
Woo, nice.
So it got really interesting fast.
By my math, that's about a $400 million a year run rate.
Right.
If we extrapolate.
So it kind of began the beginning of this pretty amazing experience. Ryan and I went out and raised a lot of funding. We crisscrossed the country and raised, capital from some incredible family offices, funds like TCV. That's where we met Chris Chuang. And he ended up joining the team after leading the investment from TCV. Mm-hmm. Carl Icahn and his son Brett ended up investing. So it was sort of the whole gamut of investors that you could have behind the company, which fueled the expansion. The sales team closed deals with dozens of phone companies, and at the peak, which would have been the year the Motorola Razr came out, we did $1 billion in ringtone sales in a single year, and that would have included those wallpapers you mentioned. So.
Yeah. So you went from being out of cash, 58 no's, to talking to Carl Icahn in 3 years?
Yeah, that's pretty wild.
It is.
It was 2006, 2007.
Yeah. Yeah, that's crazy. So then tell us what happened to Motricity. Let's tell the end of the Motricity story.
So, I mean, the end of the Motricity story is probably began when the iPhone launched. I still remember we had at this point, a large team whose whole job was to test all the new phones. So it was sort of this exciting, Nathan Mapes was on that team, Chris Matherly, Alex Bloom, they would have had a room full of these phones. And it was always an exciting day when we get a FedEx from AT&T or Verizon, because it would have the latest model. And we were one of the first people to see the iPhone. So we saw
before the big,
way before everybody knew about it. So we saw this iPhone and we're thinking this is gonna be the next catalyst to take us to the top. But the iPhone locked it down, and we didn't know it till a little bit later. But that was the beginning of the end.
Yeah,
they closed the ecosystem.
Yeah, because they wanted to make the $1 billion off the
they wanted to have
the wallpaper
their app store,
and
which
the
is
apps. Yeah,
one of the most successful things ever, right? So
yeah. So at that point, you guys either filed to go public or went public.
Filed to go public.
Okay. Yep.
Was that Ryan gets full credit for for the IPO.
Yeah.
We did the bake off. We were talking to all the investment bankers. Ended up getting Goldman and JP Morgan. Ryan was able to get it public before.
Those are the best. They rarely work together, and that's like the marquee too to get. Yeah.
And the company revenue had scaled up, fairly large as well. We grew through acquisitions. I mentioned Chris Chuang. He joined us from TCV and led the nascent corporate development effort, which ended up growing to take over 7 or 8 companies.
Yeah.
Which also brought some entrepreneurs to the region too. So I think that played a huge role. And the $1 billion a year of ringtones, we were getting, think back to that original business model where we cut these deals where we basically didn't ask for much money up front, but we got a royalty on every one. So the net revenue that we kept, which would be the equivalent of like high margin SaaS revenue, was like over $100 million a year.
Yeah.
Nowadays, I think you have to have over $200 million a year to go public, probably. But back then, 100 was the mark, and we got to 100 million.
We're squarely there, yeah.
And we're able to go public. But the market conditions started to get bad again. 08, 09, right? So I feel like the company limped into the public market, and it's frankly a miracle that it got out. Kudos to Ryan and many other people on the team. It got out. It was like a $50 million IPO at a $400 million valuation. So we actually did like a slight down round, but we got out.
Yeah. Cool. The other thing you guys did to support the area is the Goodman family renovated this American Underground area, and you guys were one of the big anchor tenants in the American Underground kind of redevelopment. That's my memory.
No, you're totally right. Yeah. It's now the Burt's Bees building.
Yeah, it's like the big anchor tenant at the back where the waterfall flows down.
Right. Yeah. That waterfall used to say Motricity.
Yes.
So that office was something else. I had the chance to go in there not too long ago for a fundraiser. So it was kind of crazy to walk the halls of where see our old offices, and a lot of memories in that building. But the world was different then. You had to build these headquarters. I think you can do a startup a little bit more efficiently now, but that was a signature thing. And we were one of the first big tenants in downtown Durham.
Yeah, that was cool. And okay, so you limp into the public markets. You're still chugging away. Hopefully, you got to take a little bit off the table somewhere in here.
Yes.
Okay, good. Because you've been working hard at this thing since you were basically 16. So we gotta get you your due. And then, so the iPhone is kind of like causing a lot of problems for you guys. And then, how did you navigate that? And then what was the ultimate end of Motricity?
So I mentioned that Motricity started to grow through an M&A machine, which is pretty much the playbook too when you go public. You can start to do strategic deals. Yeah. And one of the biggest deals that the company did was buy a division of a company called InfoSpace. And you probably remember that name because it was one of the early internet companies. But they had a pretty large division doing similar stuff like ringtones and portal services. So
something Jain, Jain.
Naveen Jain.
Naveen Jain.
Yes. Wow. And that was kind of satisfying for me because like super early on in Pinpoint's life, we nearly got acquired by InfoSpace. And Naveen Jain, I remember he sent me this email, and I had the chance to meet with Naveen a couple of times. And Naveen was this larger than life guy, and still is, and his son too. But Naveen sent me he's like, we want to acquire your wireless search engine and make it part of the InfoSpace suite, which is like super exciting. And he sent me a multiple choice question because I said, you guys make me an offer. He said, no, you tell me how much. And then he sent me a multiple choice question. It was like, $0, $1. It was choice B. $1 million or 10 million. And, he basically wanted to buy us for nothing. I'm flubbing the story, but it was like sort of almost offensive.
Games where he would fly people down and then like not meet with you and send you.
Yeah.
Like he was constantly playing these games. Yeah.
So we didn't get acquired by InfoSpace. So it was kind of a nice thing when we were able to sort of come in and buy, a division of their company for 175 million, much later. But there's a significant part. The reason I'm saying all this is that as part of that deal, ultimately Ryan and the team made the decision to relocate the headquarters of the combined, company from Durham to Seattle, Bellevue, Washington. So, as part of that transition, I decided to stay here in North Carolina. So I spun out a small team and some assets from Motricity and started my startup adventure number 2.
Cool. What's that called?
So that was called at the time Pocket Gear.
Okay. Yeah. Oh, I remember this. Yeah. Is that going to turn into Sift or?
No.
Okay.
So yeah, I've done 3 companies. This is what turned into Appia.
Oh yeah, Appia. Okay. Yeah, we're butting up against time, but we've got a lot of. I want to definitely get the good pinpoint to Motricity story in there. Give us kind of the high level of So you've spun out. You're no longer president of Motricity or any of that kind of stuff. You've had your exit, which is good, and now you start. Pocket Gear. I was
Another
Pocket
terrible
PC.
name. Not the best name.
Pocket Gear. What was the idea of Pocket Gear?
So the idea was we were going to, the iPhone is a big thing. We're going to build an app store for all the other platforms.
Okay.
And sell it to the phone companies.
At this point, Android wasn't really ascendant, or was it?
It wasn't really ascendant. No.
Yeah. Okay.
But it started to be pretty shortly thereafter. And
did you meet that dude? He was here in Chapel Hill building Android. Did you know that?
Andy Rubin? Yeah. Well, Andy, I'm forgetting the name, but there's I did.
There's another guy.
They did Danger.
Yeah. The Danger team is ultimately what was the kernel for Android. Was in Chapel Hill, right?
Yeah.
How did they get here? Was it to you guys? Was this one of the people you guys brought to town?
No. I don't remember it exactly, but obviously the Danger thing happened, and then Android was bought by Google for $50 million, and the rest is history. So
yeah, I'll have to explore spelunk the history of the triangle there.
Yep.
I also met these really early crypto people. They were off Rosemary Street in Chapel Hill in this retail location. And they were super squirrely, and they all had crazy beards and stuff.
I think that's the magic that makes the triangle, right? It's UNC, Duke, and State ultimately.
Yeah. And I was like, "What are you working on?" They're like, "We're working on cryptography," and I'm like, "What's that?" And they were working on email. What would later become that email standard for crypto. Yeah, anyway, but I always wonder if they were involved in what ultimately became Bitcoin. Okay, so you're going to do your own app store. Give us kind of so Pocket Gear, how did that then proceed? Did you raise capital? How did that get into Appia? And what's
we raised
the story there?
Yeah, we raised some initial capital from some of the same firms. So Wakefield Group, Nora Mosley Partners. Steve Nelson has been involved with every one of my 3 companies from sort of day one. He's my mentor, even though he's not here in North Carolina anymore. But we ended up raising a Series B too, where we brought in BlackBerry's venture arm, Trident Capital, which was a great firm in Palo Alto, and Eric Schmidt personally from Google invested too. So the idea was we were going to build the independent app store for all the carriers, and but to make a super long story short, that idea didn't work. I mean, we actually became, I think, the 3rd or 4th largest app store by volume of installs. We were powering the app store for probably 30 phone companies, Vodafone and Airtel in India, Opera's browser app store across the world. So we were doing tons and tons of installs. But our 2 things went wrong. First, we thought people were going to pay for apps the way they had paid for ringtones, a couple of dollars each, and we spent a lot of time building the store and integrations for billing. And the market for apps went to this freemium model, so it was totally different. But then the bigger problem was, frankly, we might have been number 3 or number 4, but it didn't matter. Yeah. Apple's App Store, which was closed, and we couldn't, play there. And Android market, which became Google Play, was number 2, and it was like a lion's difference between us. So it was another hard pivot.
Yeah,
we had raised a lot of capital. Actually, it's a little easier the second time around.
About how much? 20 million?
I want to say 20 million, maybe 30 million. And we had Venrock came in as well, Trident, plus the investors from Motricity. And we basically saw the writing on the wall. And I remember we had a board meeting where it was like, we should shut the company down. One of the investors was like, we're shutting it down, called a vote.
Wow.
And they fired me.
Holy cow. Okay. I didn't know this part of the story.
But I took it on the chin, and I'd sort of been through worse. So I basically said,
you decided to go back to Stanford.
Yeah, no, I didn't. I think I just said, look, good luck getting some. I mean, we're basically, it's a restart. So and if you don't want to distribute the capital, I said, look, give me 6 months. You don't have to pay me. Give me 6 months, and I think we can save this thing. And we laid off a bunch of people. Again, it was sort of the same movie. Yeah. But we basically brainstormed 2 ideas. We split the team into 2 teams. So we probably had 75 people. I skinnied down to 40 people and split it into 2 20-person teams, and we chased our 2 best ideas. And the first idea was subscriptions. We had kind of seen this happen with ringtones, so we thought, well, maybe people aren't going to buy the apps. We can pull a subscription, a catalog of apps together, almost like a Spotify for $9.99 a month. That was the idea. And then the second idea was an ad network. And what's crazy is like when you have that hyper focus and a gun to your head, because the board basically came around and said, okay, you have 6 months. And if you don't, it's over. We're shutting it down. This is how much you can burn. But basically both ideas worked. But one idea worked a lot better than the other. And so we ended up just going all in on that. And that sort of the rest is history.
Yeah. That's the ad network.
And that was the ad network.
You created a mobile ad network.
So we were probably one of the first ad networks for what's called now in the industry cost per install advertising. It's sort of app install advertising. We did this probably a year before Facebook started doing it. Of course, it's a huge, market now, but it was the idea was we had some traffic. We had all these app stores. So we could start auctioning off the slots, very similar to, GoTo.com that we talked about earlier. That was the idea.
Yeah, interesting. Pay to play. And then you figured that out, and then an ad network can run on other people's app stores. Mm-hmm. So now you've gotten yourself out of the little, the distant third thing, and now you can be on Android and to some extent.
Right.
It would work on the Apple app store.
Yeah. And by the way, that wasn't like abundantly obvious to us. Yeah. We started out trying to sell ads for Java games. Well, that's not where the market is. Then quickly focused on Android. And then we said, well, what's holding us back from Apple? Let's expand Apple. And then it really took off.
Yeah.
And, we went from 0 to a $5 million run rate by the end of the 6 months. So that's how we got the reprieve. Venrock was like, okay, let's keep going. Let's see where this is headed.
Maybe onto something.
And then 3 months after that, we were at a $10 million run rate. And like a year later, we were at a $50 million run rate. And we made the Inc. 500. It was around that time that one of the partners we were talking to about the ad network was a company, a small public company called Digital Turbine.
Mm-hmm. Cool. And then you decided to?
So they actually approached us like from the first meeting and said, we want to buy you.
Yeah.
And I think there's a lesson here too. Like I look back and I realize how significant it was. I said, well, let's slow down. But partly it's like the revenue was ramping up. So I wanted to see where this was going. But I said, why don't we walk before we run? Let's do a partnership. You guys want to sell some ads. So you have some deals. Let's see if this is a thing. I didn't fully believe their model, to be honest. They had some technology to like preload the apps on the iPhone or on Android phones.
Yes, they would go to the carrier and preload.
Which, of course, I understood from our Motricity experience.
Yeah.
But I also, because I was maybe too close to the forest for the trees, wasn't 100% sure it was going to work. I thought maybe just the broader ad network play was the one. But it worked spectacularly. I mean, Bill Stone and the DT team were so right about it that the revenue from that partnership started to accelerate. And by the time it had grown to be like 25% of our revenue, they came back to the table and they said, no, we're serious. We want to acquire you. And this time, it wasn't just him calling me. They sent in a formal written offer to buy us to the board.
Oh, wow. Okay.
At a higher price. So.
Yeah. Were they, revenue-wise, you're like at 50 million and they were similar, or they were like a good bit ahead?
I should know that number. I think they were a public company though, but very small, but they had like a $250 million market cap. They had just gotten onto like the NASDAQ.
Yeah.
They were, I think, one of those like OTC companies. This is before SPACs, but it's effectively like a SPAC, right? And they bought a few things. I feel like they might have been similar in revenue, but they had the currency of a stock, and they made us a $100 million offer to buy us.
Which for a $250 million company is huge.
Which is huge. Yeah. I think that's the part that people don't know about this story, like the untold story of the Appia deal, is that we merged with a public company. We got, and the deal was 15 million of cash, 85 million of stock. And this is, I think, all public if you like dig into the SEC filing. So like the stock portion, the 85 million, was the key. We basically owned a third of a public company. I was suddenly like the second largest shareholder of a public company with reporting requirements. So
yeah, that can either work out really well for you or really bad.
So, and I think what's crazy too is investors, we obviously signed a lockup. There was a 6-month lockup, and then it really depended on like when you sold your stock, and the stock was trading super wildly. But
well, fundamentally, you take let's say their business was effectively the value should double because you've now bolted on another 50 million in revenue. They're both growing very quickly. So, but
what's interesting is sort of, the ad tech got very hot, the trade desk, things like that. And so, and they bought a series of other companies too, which was somewhat dilutionary too, but like Digital Turbine hit $100 a share. Like they hit a $10 billion market cap.
Holy cow.
And so, I think one of the metrics for entrepreneurs too is like, you want to succeed, but like how many millionaires were created by the companies you started? And like there were, a handful from Motricity, obviously with an IPO, that one, but like if you do the math, like the high point of the stock, it was a $1.8 billion deal.
Yeah.
So there were like over 20 that I can think of just off the top of my head, but it all depended on when you sell your stock.
Yeah. Yeah. Timing's everything. And then, getting into these lockups can be very painful because Murphy's Law is like month 5 of a 6-month lockup. Suddenly the stock starts to, and there's nothing you can do. Yeah. I don't know if that happened to you or not, but I've seen that happen. Cool. So then when did you exit that and start Sift?
On day one. So when we closed the deal and announced the transaction, I guess was promoted to a board member. So I joined the board of Digital Turbine. Bill Stone was the CEO of the combined company.
Yeah.
Matt Tabergen, Jim Harvey, who's now at Pendo. Some of the original IB team sort of ran the office here in Durham.
Yeah.
Digital Turbine at the time was headquartered in California, but is now headquartered in Austin, Texas.
Yeah. They're still chugging along. And then when did the idea for Sift come up?
So the idea for Sift was actually an idea that we incubated inside of Appia. About the last year of the Appia adventure, as we were trying to figure out how we go from 50 to 100 million. It was one of the sort of skunkworks projects that we had just started, very nascent. But when we got acquired by Digital Turbine, it was a very specific thing. They wanted the ad network to marry with their single tap technology.
Yep.
And that little project was basically put on the shelf and nothing was done with it. And so as I remember, Bill approached me and said, look, we're doing nothing with this. And you're on the board, but you're probably looking for your next startup. Do you want to take this and run with it? And I was like, this sounds awesome.
Cool. And when was this in the time frame?
This would have been in 2015. So we closed the acquisition in March of 2015.
Yeah.
And we ended up closing the spin out with some funding the very last day of the year in 2015. Yeah. So we kind of got started in 2016.
Cool. So you've been working on this for about 8 years. Give us kind of what's Sift do, and give us kind of a quick update of where you guys are.
So Sift, I co-founded with Slavik Pruchnik and Jesper Rasmussen, and they. What's unique is in Aaron Schwager, but Jesper and Slavik and I have now worked together over 20 years. So they have been two of the key technical members of Motricity, Appia, and Sift. So they've been with me pretty much my whole entrepreneurial career. Mm-hmm. You started this conversation saying like, so when did I learn to code? I never learned to code.
Yeah.
But I have Slavik and Jesper, that have been the linchpins.
Yeah. Being a good product person, you need, if you have like a support team like that, they can kind of trust your intuition and build. You get into this, someone well enough, you're like, hey, could you go build this? And it like comes back perfect. Like how you envision it. Like you've got this symbiotic relationship almost after a relationship like that.
So Sift is still the company name. We've been at this 9 years, believe it or not. I mean, look at the time, 2016 to today. And of all my startups, it's the only one that didn't, that sort of out the gate, the idea worked. Like the original idea ramped up faster than any startup I've ever been part of. So we went 0 to $50 million run rate in like 2 years.
Wow.
We made the Inc. 500, like number 173, I think, something like that. It was, and we've stayed sort of under the radar. Like I think our peak headcount was like 21 people.
Yeah.
But the idea was that we built a profile of every person on the planet. So we had a big, massive Redis database full of everyone. You were in my database, Scott. And we were tracking every app you visited and a lot of other information. We had like 2 billion. So I guess not everybody on the planet, but we had 2 billion people, certainly everybody in the US in our database. And we were using that with machine learning to hyper-target ads.
Yeah, really good targeting there.
And it worked.
Yeah.
Until privacy became the thing.
Yeah. Yeah, the ATT and all the, the death of first-party cookies or third-party cookies. Yeah, seems like that would hurt something like that.
So we went 0 to 50, back to 0.
Holy cow. And why do you always pick these stories that have roller coasters in them?
I don't know.
Why can't you just do slow and steady?
My next company is going to be a hot sauce company. I just want something like slow and steady. I'm too old to go back to Stanford now.
Well, I think you pick ideas that are big, and this is part of shooting at something big.
I do like
you're on a roller coaster.
That comes from my mentor, Steve. I swear, every time I would call Steve, he'd say, like, you got to think bigger, think billion, think $1 billion. And look, I mean, Motricity hit $1 billion market cap, maybe with an asterisk. Yeah. Digital Turbine, the Appia deal, arguably hit over $1 billion, like 1.8 billion at the very, very high day, but obviously with an asterisk. It was, Sift, we're aiming for the moon, and we had an idea. We thought we had a tiger by the tail getting to 50 million run rate that fast, but it crashed down and we had to completely reset. And it was another one of those moments where the board said, should we just like wind this down? I think I said it. Like we'd actually accumulated like 10 million of retained earnings.
Yeah.
So we're like, should we just wind down and distribute? We'd only raised 4 million of capital, I think.
Wow.
So it would have been like a lowercase win. And we seriously considered doing that. And if we knew how bad it was going to get, that would have been the right decision.
Yeah.
But it's always hard when you're still in the middle of it.
But a lot of the big guys, I know Facebook has faced similar problems, and so has Snapchat and some of the bigger ad networks. And they are on the other side of it through using AI and using a lot of more, because you can't get that detailed personalization, they can at least start to see patterns and then, do predictive analytics, what the broader family of AI kind of things to figure out machine learning, predictive analytics to figure out targeting again. Have you guys been able to kind of get on the other side of that?
It's hard.
Yeah. Working on it still.
We're working on it still. It's, we have climbed back. We're back to about a $5 million run rate.
Good.
So okay, there's something here, but it's really, really hard. And you're right. We're spending most of our time on the algorithms. ML and AI have come so far since we started this company, and hoping we can get back.
Well, 2 out of 3, I think the odds are in your favor. So I know, well, we're an investor, a teeny tiny investor, but regardless, always cheering for your success. Yeah, you've stayed remarkably humble, having had a lot of success. So I appreciate that.
I'm from Eastern North Carolina.
Go out there, eat some peanuts, and
go Pirates.
Yeah,
ECU.
Cool. Well, thanks for coming on the pod. It was good to hear all these stories. Hopefully, other founders that listen to this realize some of these stories get painted as up and to the right, and they're hardly ever that way. So you've had a lot of really interesting adventures. Thanks for sharing those stories.
Yeah, thanks, Scott. Great to see you.
Thanks, you too. Bye.
For more tweener content, check out the Triangle Tweener Time Substack at tweener.substack.com. For more tweener content, check out tweenertimes.com. Thanks for listening, and we'll see you again soon on Triangle Tweener Talks.